Hello and good morning, everyone. Welcome to yet another episode of the Market Snapshot. My name is Rufus Kamau, Markets Analyst at FX Pesa. So today we'll be talking about the top market events that we will be expecting in the markets this week. We'll also be doing some technical analysis, trying to understand what are the prevailing market patterns, especially after the dollar volatility that we experienced in Friday last week. And once we do this, hopefully everyone will trade from an informed perspective. So as always, this session does not constitute of any investment advice. It's not a recommendation to trade, so you should always do your own due diligence, practice proper risk management, and trade responsibly. So we'll be looking at the economic calendar, trying to understand what are the key events to trade. As always, Monday is usually a very slow day. We don't expect a lot of events on Mondays. There's a couple of bank holidays today, and once we cover this, then we will also try to look at the key highlights, especially in the news, what could be moving the markets this week. So you can see a lot of you have already joined. I can see Kay right in the house. Thank you for being the first to join and comment. Also with a very good request, whether the sessions could be posted on the media early, like 9 or 8. So my personal recommendation is that you basically subscribe to the YouTube channel, set a reminder. So whenever we have a live event on YouTube, you will always get a notification. That will really help whenever we have sessions, but you also consider publishing the sessions earlier. So I can see Odiwa in the house, Karaoke Davis in the house, Mike Komulwa in the house, as well as Smith Effects. Good morning. So let's get started right away. So this is the Forex Factory economic calendar. And as you can see, there's quite a number of events that have already happened this morning. So first things first, we have the New Zealand retail sales data quarter over quarter, which came in better than expected at 0.5%. Compared to the prior, it was slightly lower. Previous number was 0.8%. We expected a 0.1% increase, so this is way better than expected. Core retail sales were up 0.07% compared to the previous 0.4%. And of course, the expected was negative 0.3%. So still a much better performance than expected. So in this case, basically showing that the New Zealand spenders are basically spending more, which is usually a pretty good data point showing that the economy is doing well. So there will be a bank holiday in the UK all day in observance of the suburb bank holiday. So little to no volatility is expected in the pound pairs. German IFO business climate was better than expected at 89.0 compared to 88.6 in the prior reading and 88.7 as expected. So clearly much better business climate in Germany. So other than that, going forward for the rest of the day, we'll be expecting data concerning corporate profits in Canadian economy at 3:30 p.m. We'll also be looking at the Belgian NBB business climate data in the Eurozone at 4 p.m., new home sales in the US at 5 p.m., and 10:15 p.m. We'll be looking forward to a speech from yet another Fed member, in this case, Fed member Logan. So that will be the only news in the markets today. Then for the rest of the week, going into Tuesday, we'll be looking at the Bank of Japan core CPI at 8 a.m. tomorrow. In this case, we're expecting a slight increase to 2.4% for core CPI in Japan. So we'll also be looking at the core durable goods orders as well as durable goods orders in the US at 3:30 p.m. Then we'll look at CB Consumer Confidence Survey as well as the Richmond Manufacturing Index at 5 p.m. tomorrow. Then at 9:30, we look at the Bank of Canada Governor Macklem speech at 9:30 p.m. So Wednesday, this is when we'll be having even more news coming in the markets, with Australian CPI coming in first. So we're expecting that inflation in Australia may have ticked up higher from 1.9% to 2.3%. Of course, an increase in inflation would most likely strengthen the Australian dollar, as there will be expectations of the Reserve Bank of Australia being less aggressive on rate cuts. So the IEA crude oil inventories will be coming up at 5:30 p.m. on Wednesday. In this case, as per the previous reading, there was a very big drop of negative 6 million barrels in US crude stocks. So if there's further reduction in crude stocks, this basically means scarcity. We could be seeing oil prices recovering. Then the Swiss GDP on Thursday at 10 a.m. Then preliminary GDP quarter over quarter for the US economy. In this case, we're expecting a 3.1% increase in US GDP. So these may as well be one of the top premium events for the week, with unemployment claims also happening at the same time. Main focus will be on the GDP, and an increase to 3.1% would likely be pretty positive for the US dollar. So there will be Tokyo Core CPI, which will be the second inflation report from the economy of Japan, with an expectation of inflation reducing from 2.9% to 2.6%. There will be German preliminary CPI, which is expected at 0.0%. That is no change in the prior month. Then Canadian GDP at 3:30 p.m. on Friday. And of course, the core PCE price index, which is the Fed's favorite measure of inflation. In this case, we're expecting a 0.3% increase. So clearly, we don't have a lot of data on the economic calendar that is expected to be moving the markets a lot. And this basically means that technical analysis takes the highlight for the week. So technical analysis might be the best approach in the markets this week. So other than that, now looking at the earnings on this other side, there will be quite a number of companies that will be reporting earnings this week. It's not earnings seasons yet, but of course, there's still some data that is expected to be moving markets this week. So Pinduoduo Holdings, which is an online company based in China, that basically does online education as well as other tech services, is expected to be reporting earnings today. And it's one of the top highlight companies that has been doing really well this year. So if you look at Pinduoduo, it's an online company mainly focusing on agriculture, basically providing agricultural products to the retail sector or to the final consumer, basically connecting producers and consumers. So far, since the year started, the company is up 31.05%. Of course, we expect that with the current aggressive price rally, we could be seeing the stock breaking the previous highs. So good chance that we see some form of continuation this week, especially if the earnings are better than expected. So outside of that, there's more companies reporting earnings this week. There will be Heiko and Semtech still reporting today. Then on Tuesday, we look at Bank of Nova Scotia in Scotland, as well as KE Holdings. Then there will be Box, MongoDB, Encino, Okta, and PVH on Tuesday. Then on Wednesday, the highlight will be the Royal Bank of Canada, which is expected to be reporting earnings. This will be before the Wednesday's opening bell. So there will be other companies reporting, including Abercrombie and Fitch, Bank of Montreal, Donaldson, James Marker, Coles, Mastercraft, Fruitronics, as well as the Royal Bank of Canada. And of course, there will be the highlight earnings of the week, which will be NVIDIA. So as we speak right now, NVIDIA is the biggest company in the world right now, valued at, I believe, over $4 billion. Looking at the market cap, yes. So it's one company that is the first ever to reach $4 billion in market valuation. So far this year, the stock is up 32.54%. So one of the key things that have made NVIDIA the best company in the world is mainly because their microchips are way better than anyone else in the market. So there's nowhere, there's no company that is anywhere close to performing better than NVIDIA in terms of their microchips. So there's been a global demand for their chips, and as a result, all we are seeing is the increase in the stock price, with the year-to-date performance being 32%. In the past 1 year, the stock is still up 40%, and in the past 5 years, over 10x, 12x, in this case being up 1,253%. So clearly, these earnings will be a major key thing. We remember the last time we saw NVIDIA reporting earnings, there was even watch parties, people basically doing parties to watch the outcome of NVIDIA earnings and, of course, listening to the earnings call. So outside of NVIDIA, in this case, I'll be reading the highlight here. So NVIDIA will reveal progress on and prospects for the infrastructure build out as the AI industry expands when it reports the fiscal 2026 second quarter results after Wednesday's closing bell. So NVIDIA's stock is up more than 30% in 2025 versus a gain of about 10% for the SP 500. Its valuation has been driven by the relentless expansion of the AI and data center ecosystem, according to the Treasury Partners Chief Investment Officer Richard Sepperstein, and supported by a powerful combination of stable inflation and ongoing economic growth and expectations of declining interest rates. So Wedbush analyst Matt Bryson reiterated his outperform or buy rating and raised his 12-month target price from 175 to 210 heading into NVIDIA earnings announcement. We continue to believe growth is announced hyperscale spend is largely going to build out AI capabilities and in particular end up flowing to NVIDIA, the analyst says. So clearly, it's one big event to be watching in the markets this week. Other companies reporting on Wednesday include Agilent Technologies, there will be Bill.com, Cooper, CrowdStrike, Five Below, Griff, HP, NetApp, Nutanix, NVIDIA, Pure Storage, Snowflake, Trip.com, Urban Outfitters, as well as Viva Systems. So on Thursday, Bath and Body Works will be reporting. There will be Best Buy, Brown-Forman, Barrington Stores, CIBC, Dick's Sporting Goods, Dollar General, Hormel Foods, Lee Auto, Baribu Boats, Ollie's Bargain, Toronto, Dominion Bank, and Victoria's Secret. So clearly, it's a pretty good week to take a keen focus on US listed Chinese stocks. Of course, we mentioned Pinduoduo on Monday. Then, in this case, a key highlight for US listed Chinese stocks will be Li Auto. And of course, towards the end of the week, we'll also be looking at earnings of Alibaba. So there will be Affirm, Ambarella, Autodesk, Dell, Domo, Elastic, Gap, Marvel, Petco Health and Wellness, Sentinel One, and Ultra Beauty. So on Friday, the only key highlight earnings will be Alibaba. So clearly, US listed Chinese stocks will be on the forecast this week. We have already checked Pinduoduo, which is up 31% year to date. So good chance of some growth. We have checked NVIDIA, which is up so far 32% since the year started. Then there's Alibaba, China's biggest online retailer. I would say Amazon's competitor. So far, it's up 44.99% year to date. Of course, after earnings, if it's better than expected, good chance that we see even a bigger performance. Then lastly, Victoria's Secret has been pretty down 46.52%. So perhaps better than expected earnings could likely boost the stocks and lead to some form of recovery efforts. So other than that, looking at other key highlights in the markets, Poland retail sales growth hits 3-month high. European stocks trade lower at the beginning of the week. Turkish business confidence rises to 3-month high. Thailand exports rise more than expected. Spain producer inflation slows to 0.3% in July. And iron ore jumps as Rio Tinto halts production in African mine. So other than that, I'm still trying to see if there's more updates for the week. So we are 23 days away from the next Fed meeting, which will be happening on the 17th of September. And as it stands right now, we have been expecting a 25 basis points rate cut from between 4.25 and 4.50% to 4% and 4.25%. And of course, the market is pricing in an 87.3% probability that the Fed will be cutting rates in the next meeting. So as we all know, as per Friday last week, when we saw the speech from Jerome Powell on the Jackson Hole Symposium, he basically mentioned that the Fed is expecting a rate cut on the next meeting. So as a result, we saw such a strong volatility in the dollar index. And of course, that was premium opportunity to trade. So we will be following up closely on this. So dollar struggles to recover from Powell's dovish surprise. So Powell opened the door to a September rate cut in the Jackson Hole speech. US currency dropped to 4-week low versus euro on Friday. And Trump's threat to fire the Fed Governor Cook also weighs on the greenback. So the US dollar attempted on Monday to pull itself up from a 4-week low on the euro after a dovish pivot from Fed Reserve Chair Jerome Powell, which sent it tumbling more than 1%. The US currency added 0.1% to 1.1705 per euro, but remained within striking distance of Friday's low at 1.174225, a level not seen since July 28. So it edged up 0.1% to 1.3509 versus sterling, following a 0.8% stride in the prior season, and rose 0.3% to 147.26 yen, growing back part of Friday's 1% tumble. So the risk-sensitive Australian dollar briefly leapt to a 1-week high of 0.6523 on Monday before pulling back to trade little changed at 0.6490 in the prior session. In the previous session, it surged 1.1%. So Powell, in a closely watched speech at the Fed's annual Jackson Hole Symposium on Friday, opened the door to an interest rate cut at the central bank's meeting next month. So downside risks to employment are rising, he told an audience of international economists and policymakers, and if those risks materialize, they can do so quickly. So in this case, 84% odds of a quarter-point rate cut on September 17th, and a cumulative 53 basis points of reductions by year-end, according to LSEG data. So clearly, we will be expecting a rate cut on the next meeting. And that has been a key driver of market sentiment since Friday. And since we don't have any major news today, clearly that is still a key driver in the markets as of this morning. So on the other side, oil prices climbed after Ukraine attacks hit Russian energy sites. Of course, from the Brent oil prices, we haven't seen a major move, but slightly much higher oil prices. So Ukraine drone attacks target Russian energy infrastructure. US Vice President says Russia has made significant concessions towards a settlement, and Fed Reserve Chair Jerome Powell signals possible rate cut in September. So I'm still checking to see if there's anything else I've missed on the key market highlights as of this morning. So from the FinViz website, short for financial visualizations, we can see the performance of stocks as of this morning, and currencies as of this morning. So we haven't seen a major swing on any currency. So far the weakest currency as of this morning is the Japanese yen, which is down 0.23% against the USD whereas other currencies have been losing to the USD, and New Zealand dollar and Australian dollar slightly higher than the US dollar. But overall, it seems that there is a little to no volatility in the markets today. So, also looking at the past week, when we know that the US dollar weakened, we also know that it had strengthened earlier in the week, so we didn't have any much of a change. So it seems to be the same. So notice that in the past day, let's do a month to date. So clearly, month to date basically shows us that the Euro, JPY, and GBP have all gained by more than 2% against the US dollar, whereas the New Zealand dollar has been the weakest since the month started, down 0.41%, whereas other currencies have been gaining against the USD. Swiss franc 1.26%, Australian dollar 1.06%, and Canadian dollar 0.17% gain against the USD. So still, and since the year started, we know that the euro has been the best currency. So far, 12.98%. This is almost 13% against the USD. The Swiss franc, 13.16% against the USD, which basically leads to the assumption that even if the US has slapped the Eurozone with 10% baseline tariffs, with the euro gaining by 13% against the USD, this basically beats the tariffs, meaning that if you're charging us 10% higher, but our currency gains by 13% against your currency, then it doesn't affect our business as much. So in this case, the Eurozone is basically benefiting. It's had a much better gain against the USD since the year started. So they're not impacted by tariffs as much as Trump would have wanted. So other than that, trying to see if there's any other major highlights I may have missed. Yes, Australia, New Zealand dollars clinging to gains and as investors bet on US rate cuts. And lastly, Prime Minister Christopher Luxon says he personally thinks the Reserve Bank should have been more aggressive with the official cash rate. So in this case, New Zealand experienced a rate cut just about a week ago from 3.25% to 3%, and their Prime Minister is expecting even further rate cuts, and of course that is meant or expected to weaken the New Zealand dollar further. So now I believe we can jump straight into some technical analysis and try to understand what are the prevailing market conditions. So kindly give me a sec. All right. So this is the MetaTrader 5 trading application. This is the app that we mainly use for trading. So we'll be doing some technical analysis, and from the first chart that you can see right here, this is the China A50 stock market index, and so far we are seeing a multi-year high. The last time that this index was at this high was back in 2024, and of course you can see that we are on the fourth consecutive day of a rally after moving out of this bearish channel. So we had a breakout here and a couple of retests twice, and then the market pushed towards the upper side. And so far, the China A50 index has been on a very strong push. And as of this morning, we are seeing an extension of the bullish momentum. So clearly, we should be expecting even more upside from the Chinese index. So outside of that, trying to find the Hang Seng index. So the Hang Seng index, from a daily time frame perspective, you can already see it's also on a very strong rally. The last time we saw the index here was in 2021. So clearly, very strong bullish momentum, and the major resistance that we had here has already been broken, and the market is attempting to break above that. So the Hang Seng Index is also doing some good momentum. So other than that, looking at European equity indices, if you look at the UK 100, it has had some pretty good momentum with the fourth consecutive day of bullish momentum, and of course into a new all-time high. So from the 1 hour time frame, we know that there's this period that we spent on a sideways momentum, not the very best of things in the markets, but eventually we had a breakout following some consolidation here. This was on Thursday last week, so very strong momentum. Friday we kept pushing higher, and today we are seeing an extension of the bullish momentum. So good chance that we see the market pushing even higher for the day. So for Japan, there has been a very strong bearish momentum. We followed these last week, and even towards the end of the week on Friday, we had a pretty good retest of a key level support here. The market bounced, but today we are seeing an even further push, looking to retest the 42,516 price action level. So not the very best of momentums, clearly indicating that the market may have hit resistance area, and now we are looking at a potential reversal. In this case, looking to retest the lower trend line. Of course, the lower trend line is all the way down. So good chance that we see the market pushing even lower. And of course, the previous high is now a new target around 41,932. So for US equity indices, the Nasdaq had a bit of a sell-off last week, but then towards the end of the week, after Jerome Powell's speech, had a major boost. So you can see the strong recovery that happened on Friday last week, and now there has been some weaknesses since the market opened. So clearly, all we are seeing since the market opened is the Nasdaq putting further back down once again. So after Jerome Powell, we didn't have much happening, but clearly at some point, should be expecting some further weakness, and then if we get a major driver in the markets, then we'll break out of this formation. So so far, even for the Dow Jones, which made some very strong rally on Friday, hitting a new all-time high. If you go to a smaller time frame, you notice that the market is erasing some of those gains that we saw on Friday. So clearly, it's a slow burn happening with the Dow Jones. So unless there is a key major driver in the markets today, then this is expected to be the continuum. So from US 500, we almost got into a new all-time high. You can see from the daily, it was very close. But now looking at the price action today, it's the same thing. So market basically consolidating after the big momentum that we saw from the Jackson Hole Symposium last week on Friday. So on other European equity indices, in this case, looking at the German DAX, clearly it's a market that has been in consolidation for the last, I would say, 6 trading sessions. So today being the 7th, we know that on Friday there was an attempt to break towards the upper side. You look at today's low, compare that with Friday's low and Thursday's low. There has been some progression. The market has been unable to form lower lows. So good likelihood that today we break the upper trend line and head straight for the previous high, which is all the way up at 24,538. So good chance that we see the market bouncing from here and heading on for a rally. So Swiss stock market index, we have been following this closely, and we know there was some form of gap here in the market that was not filled. So clearly, every time we got to this particular support, the market was just bouncing. So eventually, last week, we talked about the market breaching this area and getting to the prior high. So the gap was closed, and immediately after closing the gap, you can see there was a bit of a sell-off, but still the market seems significantly bullish. So from the daily time frame, you can see it has been a pretty good push from prior lows. So good chance that we see more bullish momentum this week. So for the Norway stock market index, also there was a gap here. We talked about this over the last couple of weeks. So last week, the market was able to cover the gap and even move higher. And after we cross the gap, we looked at this previous high as a potential target. And of course, from the day time frame, you can see that we are looking at potential extensions in the bullish momentum could be extended today. French stock market index, not all that great as of this morning. So clearly, big sell-off happening. So since the market opened, all we have seen is bearish momentum. And now that we have hit a key level support, the question is whether the market will be breaking below this area here. So clearly, in a day where there is a panic selling after hitting a major key resistance, usually we look to observe whether there will be a break towards this area here. And of course, if there is a break, then we target the next key level support. So the EU50 stock market index, clearly we expected a very strong bullish momentum on Friday, hitting a new high. But then what we saw was a shooting star kind of candlestick, and the market changed direction. And now you can see the bearish momentum happening as of this morning. And knowing that there is a little volatility on a Monday, then I expect this to be the key level support as the market oscillates between highs and lows within these two particular trend lines. So right now we are on a swing from this area down to this area here. I don't expect to see a break from this particular trend line unless there's a key change in the market. So for the Netherlands stock market index, we just hit the upper side. So of course, now we will be looking at the market changing direction, moving to this particular area, but not much of a key driver, let's say, breaking the particular trend line as of Monday. So outside of that, now going into currencies and commodities, of course, you have our favorite asset in this case being gold. So gold had a pretty strong break here for this kind of consolidation. In this case, we can say that the overall average direction of gold for the last 2 weeks was bearish. But then we had a break on Wednesday, retest on Thursday, and then Friday we had the strong rally after the Jackson Hole Symposium. So expect gold to now take a positive direction, considering that on a daily time frame, gold has been on some form of consolidation for the last, I would say, 5 months. So in 5 months, gold has been more of what we would say in a ranging territory, basically trading sideways. So up, down, up, down, up, down, up, down, and so on. And if you observe clearly, then you can see that with this kind of up-down momentum, then it's clear that right now we are on an upswing from the lower trend line towards the upper one, with volatility reducing over time. And of course, given the strong momentum that we saw here on Friday, here the market is basically trading sideways in some form of a flag formation. So we'll be observing this closely with a keen eye for a potential breakout. So it's more of a market that is just trading sideways. So from the 15 minutes chart, this has been the current prevailing pattern. And of course, the key thing to observe is if gold breaks towards the upper side. Looking at Brent oil, we were in some form of consolidation here, moving sideways. So eventually we had a breakout towards the upper side last week. We kept moving, and of course the target was the top of the pattern. So the top of this pattern was somewhere around here. And once the market got there, we haven't had much of a momentum. So since then, we got to this area on Thursday. Friday, we kept oscillating around there. And today, the market is attempting to break towards the upper side. So if we happen to breach this successfully, then the next level target would be around $68.672 per barrel. So quite a run from the current price level. And of course, if you go to a smaller time frame, say the 15 minutes chart, yes, there is some form of bullishness here, but not all that convincing. If you go to the 1 hour time frame, yes, it seems likely convincing, but the market hasn't broken out of Friday's high yet. So on the currency side, the dollar index had a bit of a sell-off, about 1% last week. So hitting 97.4 level And of course, this morning we have seen quite a strong bounce. So looking at major currency pairs, clearly when the euro gained against the USD, it pushed to a new high, and not a record high. It's more of a recent high. It's a high that we had just seen on the 13th of August. Then since we got to that area, you'll notice that the market reversed immediately. And today we are seeing the market erasing some of those gains. So in this case, basically following the price action over the prior week. So if you want to clean our charts here and we look at really what is happening on the euro, it's more of a sideways momentum. It's a euro that has been pretty bullish since January. So notice a strong momentum in the euro. But then if you refer to the past 1 month where there was a major sell-off in the euro, this month a very strong rally, we can see that this is more of a sideways momentum. So clearly, after the strong rally last week, we got to a major level trend line. And if you identify these previous highs and connect with the high that we saw last week on Friday, then this is a key level resistance area. And since then, we are seeing the market moving further back downwards. So of course, we'll be expecting the market to be retesting a couple of key level support areas. So notice the key level support areas are still pretty close. But then if we break below that, then we should be looking at price action areas around 1.16717. For the pound USD, still the same thing. So there was a bit of a sell-off last week, and eventually on Friday the market recovered. But today we get right back into the same kind of formation. So if you isolate the Friday's event and take that as an outlier in the data since last week, then this was the prevailing market pattern. And of course, the market is attempting to get right back into the same pattern. So for AUD/USD, yes, very strong momentum last week on Friday. But then you can see the market attempted to be more bearish. But then as of this morning, it seems like the Australian dollar has maintained some level of bullishness. So in this case, more of a sideways momentum. I would say that there is a good likelihood that the market has already formed the high and low of day, with that being the high and this being the low. So good chance that we see the market remaining within these limits. So for USD JPY, you can see the dollar maintaining some form of recovery against the Japanese yen. So from the 4-hour time frame, just give me a sec. This is what we are experiencing here as a key level resistance area. That is the Friday's high. And then as per the support area, we are looking at this. So after bouncing from this key level support, you'll notice that there has been some pretty good momentum this morning. But now the market seems to be stalling, but good chance or good likelihood that the dollar continues recovering against the yen. So as per the Swiss franc, we had a key level breakout. Notice from the 4-hour time frame, this is the consolidation we were looking at the last 3 weeks. Then from the 1-hour time frame, clearly a breakout towards the upper side and then a breakout towards the lower side, a retest continuation kind of formation. Notice how this played out. This was the key level support. Market breaks out, goes back to the same area, and now pushes towards the lower side. In this case, I would be expecting the Swiss franc to be regaining more momentum. Remember, it has been the biggest gainer against the USD since the year started, up 13%. And in this case, we are looking at a potential extension here of the Swiss franc gaining even more against the USD, looking to retest the day's low. So other than that, I don't know what else we may have missed. I believe we covered the New Zealand USD here. So New Zealand USD making a major bounce. Notice from the daily time frame that this was a pretty good sell-off. We had a key level support here, which was broken last week, I believe on Tuesday. On Wednesday, then Thursday and Friday we had some major bounce back. And now here we are looking at the market making a major recovery. So from the 4-hour time frame, this was a key level support. We have already broken right into it. So good chance that we move to the next area, which was support now turned into a resistance. So in this case, likely momentum towards 0.59093, given that this was a key level support and the market was unable to push below it. So last item, I believe, should be USD CAD. Trying to load the chart here. Can't find the chart. Of course, we still have Palantir having a bit of a sell-off, and a bit is an understatement. So we had a 24% sell-off within a span of a few days in a stock that was up over 100%, 140% since the year started. So Palantir starting the year right here, this was around here. Trying to find the right date for the beginning of the year. So the stock basically opened the year at around what? $75 per share. Went to a high of $185 per share. But then there was a lot of panic last week, and this led to the big sell-off. So towards the end of the week, I would say Wednesday, Thursday, Friday, there was some pretty good recovery. And today, we should be expecting to see a continuation of the sell-off, given we had some pretty good momentum here. So after some recovery here, you can see that the market still insisted on more sell-off. So in this case, notice how there is a coincidence of more resistance and panic selling in the stock. So good chance that we see a continuation of the same. So we look at USD CAD. Yeah, finally found it. So clearly, market that was pretty bullish last week before the sell-off happened on Friday. So here we are looking at a key level trend line here. Also looking at the 4-hour chart and the daily, you would notice that the US dollar has been generally losing to the Canadian dollar for the better part of the year. Pretty good bounce in the last 2 months, but now seeing here the dollar being a bit weak, good chance that we lead into a key level support area. So the previous swings high was very important, and now we could be seeing the market extending to that particular area for even more grounded support. So potential extension of the sell-off towards a much lower area. But of course, given that today is a low volatility day, there's a good chance that the market remains within some form of consolidation, basically trading sideways within the limits of the swings here. So that's it for the day. Thank you very much, everyone. I'm checking the comment section to see if there's any questions. You can see Lina Mohonja in the house, me in the effects, Michael Mulo, thank you guys for joining. Karaoke Davis, Odiwa Opar. You can see Center Boy, Maureen Kakungi, thank you guys for joining. Eric Kengere, thank you for joining. King Cardi, Computer Hub 001, thank you for reposting the stream. John Mawson, thank you for joining. Drew David with a pretty good question here. He's asking, is Bullish Banter FPL still on? If yes, can you share the code? Yes, the Bullish Banter FPL is still on. Would have to check the code real quick. Meanwhile, Trying to share the screen. So the latest episode of the Bullish Banter podcast is up, talking about the US stock market and whether it's in a bubble or not. So I'll be sharing the link in the comment section. So the link is right there for our newest video on the Bullish Banter podcast, where we talk about the US stock market. On the fantasy side, I don't think it's fair to ask me for the code on Monday when I got like 22 points. But all in all, there's still a couple of more game weeks coming on. So just give me a sec to find the Bullish Banter FPL. So for those who are fans of the Fantasy Premier League, you should know that the Bullish Banter podcast has a league, and I've shared a joining link in the comment section. That is done. So good question here. Does it mean the interest rate decisions for the different Fed governors on the Jackson Hole will only take effect on the 17th of September? No, 17th of September is the next Fed meeting, meaning that that's when we expect the Federal Reserve Bank of the US to make an interest rate decision. And now that Fed Chair Jerome Powell has considered rate cuts, which we have been asking for a long time, then that is what caused the volatility in the markets as of last week. But then from the September meeting, the notes and the address from the Fed chair is what now will decide whether there will be a rate cut on the preceding meeting. So good question here. Now that the USD is attempting to recover from Friday's sell-off, will new home sales report today have more than expected impact on the greenback? Well, it's a likely outcome, but I would be more concerned about Trump. Of course, Trump will have something to say about Jerome Powell's speech on the Jackson Hole symposium. So whether Trump will be bashing his 25 basis point rate cut expectation will be a key point of consideration. So we'll be observing that closely, especially if Trump was to issue any form of a social media statement or interview within the week. But as of today, it's likely that the home sales report might have some form of impact. But this really depends on whether the home sales outcome will be bigger or wider than the expectation. So in this case, the number of new home sales, we're expecting 635K sales compared to the previous reading of 627K. But if you look at Trump and what he has said previously, he's basically saying that home ownership is basically being hurt by high interest rates. So he wants rate cuts to go down so people can afford mortgages. So it's still semi-political kind of scenario as of this moment, given that there has been a lot of push and pull between Jerome Powell and US President Trump. So good question here from Eric. I would like you to explain, when does the dollar become strong between a hawkish report and a dovish report? So it really depends on the cycle. And in this case, looking at Jerome Powell, he has been on a very strong direction in this case, moving to cut interest rates. But then of recent months, he has refused to cut despite other central banks cutting and inflation moving towards the 2% target. So when we talk about hawkish versus dovish, this doesn't imply a direction that the market will take. It basically talks about the sentiment. So whenever we talk about hawkish, think of a bird, the hawk, being a pretty aggressive bird. It basically kills and hunts its ripe prey. So in this case, it's more of a very strong reaction in the markets. On the other hand, if you look at the dove, the bird, it's a soft bird, often symbolic of peace. So whenever we see dovish, think of peace in the markets, and hawkish, think of volatility in the markets. But that doesn't tell you the direction that the market will take. So in this case, so when you say a hawkish report from Fed Chair Jerome Powell, it's more soft within expectations. When we talk about dovish comments from the Fed Chair, it's soft and within expectations. That's why we had the markets reacting positively. Whenever there is dovish remarks, then hawkish remarks, then you expect increased volatility. But in this case, representing a change in tune. Whenever you hear hawkish, expect a change in tune from hot to worse. In this case, we know that the interest rates have been moving downwards. Jerome Powell said that he's considering a rate cut, so no change in tune. So that's why there was an overall acceptance that his comments were basically dovish. So that's it for the day. Thank you very much, everyone. Remember to check out the latest episode of the Bullish Banter podcast. If you are a beginner trader, check out the Novice to Pro course, which is available on FX Pesa's YouTube. This will help you learn. And of course, if you are just starting this journey, check out the links in the description below for registering and beginning your trading journey. So you'll be able to open an account, get a free demo account, and once you begin trading on that practice account, as you learn more and more, you'll eventually be able to get into a live trading account. So that's it. Thank you, everyone. Thank you for sharing. Remember to like and subscribe to the channel. If you're watching this on X, remember to share. If you have any comments or any follow-up questions, feel free to post them and I'll be responding within the day. Good question here. What's the bias for the week, especially on the dollar's price action? I don't know. After last week's momentum showing a weakness in the dollar, I would be more bearish than bullish. I would expect the dollar to continue weakening, in this case in anticipation of the September rate cuts.